Hello, and welcome to Pro Trader Strategies Market Commentary for Wednesday, August the 2nd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get it on. Economic data across the pond. We basically got Great Britain's construction PMI came in at 51.9, lower than the expected 54.3, and the European PPI, producer price index, month over month came in line with expectations. They revised last month's up slightly. Then here in the United States, we got ADP non-farm payroll, which has become more of a valid number in the past few years, but the real number coming out on Friday is the non-farm payroll number. That's the one that we're really looking for. And but the ADP number came in lower than the expected at 178,000 hires. It was expected to be 187,000 hires, so about 10,000 less than expected there. That caused the overall equities to really start falling out of bed. But one thing that people aren't really looking at is last month's number was revised up quite a bit from 158,000 to 191,000. So a nice revision to the upside there, really taking over that downside move in or downside call with the 178 today. So not really sure why people aren't really looking at that older number. But then we got crude oil inventories came in at a drawdown of 1.5 million barrels, was expected to be a drawdown of 3.2 million barrels. So, 1.5 million barrels less than expected there. We've seen crude oil up in the 50s yesterday and the day before. Today, it's getting a little bit of legs despite that economic data point, but it caused the equities to take another leg down as well, as people aren't buying distillates or gasoline for that matter. So all of those things causing crude oil inventories to remain rather high. You would think with some of the economic data we were getting last week that they'd start, drawing some of that down, especially for the distillates aspect, not necessarily showing the consumer spending money on gasoline, but I would have thought that some of those distillates would have drawn down a little bit more, and they didn't. So that could be another cause of fear for the overall equities. Anyway, as we can see here, crude oil 49.16, unchanged for the most part on the day, slightly in positive territory. But one thing that the bulls are going to hang their hat on is that it is above that 38.2 Fibonacci level. It's going to have to get through that 200-day moving average, which it's kind of been slicing through this area like butter. And as a matter of fact, you can see right here at this 38.2 fib level, we are building a nice big node here. So we have one up here at 53.13, one down here at 49, 54-ish, and then we're building one right dead smack in the middle, very close to that 50 handle, but just slightly under it, right here at 49.15-ish area, right around where we kind of currently are trading. It's building a nice big volume node. That's where price is being accepted. So that is, we've got several magnets, if you will. My guess would be that we're going to be heading down to the volume node down here rather than where the time node is up here. This is where the most time's been spent. This is where the most volume's been spent. Right smack in the middle, we've got a nice volume node right there as well. All right, on to gold futures. Gold futures are pushing a little bit higher since that economic data points have come out. Still in negative territory, don't get me wrong, but has moved higher and well off its lows as we've seen the equities fall pretty dramatically in just the last hour. I'll show you that on the 30-minute chart of the E-mini S&Ps. Bonds moving higher as it's more of a flight to quality. They're only up 11 ticks, and I guess the markets haven't moved a whole lot, but it seems rather dramatic since those economic data points have come out. Dow Jones Industrial Average hitting that psychological number of 22,000 today, which is a new historical high. Last 5 days we've been saying that, now above this value area, which isn't hard to believe. Once you have a historical high, that's got to be above the value area, and it is still in positive territory where we're still seeing, I'm thinking, this little sector rotation out of technology and more into the blue chips as people are starting to get a little bit more nervous about the market getting a little toppy. NASDAQ down quite a bit today. I mean, it's not dramatic, but it has retraced all of yesterday's gains. It's not like a massive move, but all of this has pretty much happened, these 20-some ticks, in the last hour or last couple of hours since that ADP non-farm payroll number. E-mini S&Ps, engulfing yesterday's candle, which wasn't a big day up yesterday. We're down over 6 points right now, but yesterday was a pretty quiet day. Last couple of days have been. As I think people are really, also taking profits, getting ahead of this Friday unemployment number, which on the floor we used to call the unenjoyment number, because it created a lot of volatility and was pretty crazy. I mean, I love volatility, don't get me wrong there either, but it was just a crazy day, and fun in that matter. But the floor thing was it was an unenjoyment. And as you can see here with the 30-minute chart, right off of that economic data point at which would have been right around here on the 6:30 number, which would have been about 9:30 or so on Eastern time. That's when that economic data point was released. So that kind of caused the overall markets to really start to come off. So, not really looking at the revisions. They're just looking at the headline number is what I guess I'm trying to get at there. But it's an engulfing pattern in a sense where it's basically engulfed the whole week at this point. So pretty bearish right now. Then on to a few things that I've done, Apple being, one of the ones that was really, blasting higher. It's come off quite a bit, by about $3, but this morning on the open, $159. But if you watched on my Twitter, I was tweeting out yesterday selling puts in Apple. I just think that I went to the Apple store not too long ago. I think I mentioned this on the daily market commentaries, that there was quite a few people in those stores, so it looked like that they were going to be doing pretty good, and they have. As a matter of fact, they still are well on their pace to becoming the first $1 trillion company. So Apple knocking it out of the park on earnings. I was able to capitalize on my August, sold 144 puts for 71 cents, bought them back for 2 cents this morning on that gap up, and was trading right around 159 when I was able to cover those, because I covered those within the first few minutes of the day. All right, so I haven't added any more stocks today. I haven't done any options trades as I'm trying to hold on to some margin. Tesla is going to be a margin hog today, so I'm not going to add anything up because I want to save some margin for that. We got Apache. These are the ones that I'm going to look at, actually. We got like Fitbit, we've got Tesla, we've got Rig, Yum, Kellogg, and Apache, Clorox, Fannie Mae, believe it or not, FNMA. I'm not going to trade all of those. The ones I'm really kind of looking at are going to be Yum Brands, Apache here. I'm going to play Apache to the upside, most likely. Again, AIG, probably going to play that to the upside, so selling puts in there. And then Tesla, I'm not really sure what I'm going to do in there. As we saw a lot of those at least the American car companies come out with total vehicle sales a lot lower than expected. Tesla maybe on the flip side, they don't sell a lot of cars every month anyway, but I like to fade Tesla, and it doesn't seem to work out. As you can see, it is a pretty massive runner to the upside, but I might be selling some calls in Tesla. I haven't really decided exactly what I'm going to do with that stock right now. You know, they continue to lose money, but I'm probably just going to have to go with my gut and sell some calls in there. That's about all I got for you guys today. Follow me on Twitter at Wolfman's blog to find out what earnings trades I'm going to be doing today. Also, Friday's webinar is going to be on the long call butterfly. I'm going to show you the proper way to set that strategy up so that you increase your probabilities of success. So check that out, Pro Trader Strategies. And if you can't take that, take it easy.